So let's assume that Raoul is a moron and I'm 50% wrong. That's a $50 trillion asset class. You get to $1 million Bitcoin-ish, right?
Mm.
And assuming whether it's that dominant or less dominant and what happens to it, but you can see the magnitude of the returns. So that's a, 15x return in Bitcoin. If you're going to start somewhere, start with Bitcoin. It's just easy to do. It's widely available, through different, whether it's a credit card, anything, just do that. I don't care. Do that. And do it with as much money as you can afford to see go down 60, 70% and don't care. And expect that to happen, because that's what you have to see the long-term 150% a year. It's included within that is these downsides.
According to Raoul Pal, Bitcoin and Ethereum are essential assets that have the capacity to provide devoted investors with rewards that might change their lives. Raoul highlights the enormous potential in the cryptocurrency business, with growth forecasts indicating that Bitcoin may hit $1 million per coin. For individuals who are dedicated to long-term strategy, significant profits are still achievable even in more cautious scenarios, such as a $50 trillion value. However, this is where Raoul's advice becomes crucial for the average investor. Self-control is important. He points out that even when many people make wise first choices like buying Ethereum or Bitcoin, in bull markets, the desire to pursue riskier bets and leverage, or meme coins, frequently results in losses. Ignoring speculative distractions and staying focused can mean the difference between missed chances and long-term wealth. Before we dive deeper into Raoul's insights, take a moment to like this video, subscribe to the channel, and turn on post notifications so you won't miss future content on cryptocurrencies and macroeconomic trends.
$2 trillion where it is today in value, I think it's going to 100 trillion in, let's say, 2032, 2034. Okay, that's stupid. That's more wealth than has ever been created in that period of time on Earth by it's twice the amount of value the S&P 500, the entire US stock market, took to build in 100 years. I think we'll do it in 20. So let's assume that Raoul is a moron and I'm 50% wrong. That's a $50 trillion asset class. You get to $1 million Bitcoin-ish, right?
Mm.
And assuming whether it's that dominant or less dominant and what happens to it, but you can see the magnitude of the returns. So that's a, 15x return in Bitcoin. Average person, so I have this thesis that I've tried to help as many people with, this is from my own learnings and watching everybody else up, is what happens is you're given this incredible asset class, and at first you do an intelligent thing like own some Bitcoin or some ETH. And then you want to go out the risk curve because you see somebody else making more money, you understand you can. That's okay. And then the bull market really hits, the banana zone period, when things go bananas, prices go vertical. And you will see people online saying, well, I made $1 million today because I bought this meme coin. And you will lose your mind and you will start buying all the stupid. You'll go so far out the risk curve. And then when the music stops, the stuff you own will be worth nothing. And the more quality tokens will retain their value. The other thing that people will do in that journey is use leverage.
What is leverage?
Leverage is when you borrow more money to buy more of the asset. So I now borrow money to buy more Ethereum because I want to outperform you and I want to make more money because I'm really greedy. The 160% a year that Ethereum does as returns since 2015 is not good enough for me. I want to make it 400, 500% a year. It's stupid, right? And what happens is you borrow money to do it. It's leverage. Futures markets, perpetuals, there's a whole bunch of ways of doing this, or even borrowing on your bloody credit card. Whatever way, people will do this, and you really have to know what you're doing. Because the whole game, if this technology is going to last over time, and it's going from 2 trillion to 100 trillion, you have one job, not to lose your tokens. One job. You can do nothing like you're doing, and you will make an extremely good amount of money out of it. Your one job is to not that up. Buy Bitcoin, Ethereum, and Solana. One of those three, preferably all three. And that will stop you going to zero. The problem with the meme coin thing, it is a casino.
Yeah.
What is good is there are periods of time where everybody in the casino makes money.
Yeah.
Right, which is unlike casinos, because there's trends in financial markets.
No one's taking it out, so it's paper returns.
And then a lot of this stuff goes to zero. We saw that with NFTs last cycle. We've seen it with a whole bunch of tokens, which is where you need to be very careful of latching onto a token and just keeping hold of it, because some of these won't survive. You're lucky you're in ETH and not in something else, EOS, that was around in 2017, right? It's like you're stuck. So you need to be careful. Speculation does work for periods of time. It's better than actually lottery tickets and generally better than the casino, but only for periods of time, and then you will lose everything. Somebody's going to come into that casino and sweep every table, and only 5% of the people are going to be left with money. So just think of it that way. So if you want to have fun, but the people who do it the most are the people who live off adrenaline.
Yeah.
Right? It's the adrenaline junkies. They're usually terminally online. They probably like to gamble in other ways, sports betting. I'm not really that person. So I don't trade. Yes, I own a few meme coins because I enjoy the fun of the culture and seeing that culture develop, but just keep it simple, stupid. This is my 30 years of expertise, is this one thing, which is asset allocation. So firstly, the average person watching this is you need to allocate to this. End of story. If you're going to start somewhere, start with Bitcoin. It's just easy to do. It's widely available, through different, whether it's a credit card, anything, just do that. I don't care. Do that. And do it with as much money as you can afford to see go down 60, 70% and don't care. And expect that to happen, because that's what you have to see the long-term 150% a year. It's included within that is these downsides. Then I want you to put in some money every month, regardless of price, to build your savings in this exponential asset that goes up a lot.
Raoul Pal points out that although investors in traditional finance could look to tech equities like Apple, Microsoft, or Amazon for future development, these businesses are unable to match the potential returns of cryptocurrencies despite their size and reliability. The returns are not likely to be exponential, even if tech companies keep expanding. He advises investors to look into the prospects in cryptocurrency, which is more approachable and provides exposure to cutting-edge technology than traditional IT. The cryptocurrency market is accessible to regular investors, in contrast to wealthy people who are the only ones allowed to make exclusive early-stage investments. Raoul's enthusiasm for the space is largely due to this democratization of possibility. According to him, it's a special opportunity for average investors to take part in the kind of disruptive growth that was previously exclusive to the financial elite. Now let's get back to the interview, but before we do, please subscribe for daily videos like this.
This is all the conversation we've been having. The secular trend, the opportunity, the skill set, then it's the execution of that thing. Then it's not to fuck it up. And what you've done is not fuck it up.
He invested in
You've got your seed phrases elsewhere, so you've got no single point of failure. You've got it stored privately yourself. You have it in a large, one of the top two. There's probably three that are low risk in terms of the chances that the use gets abandoned in the next 5 years. Bitcoin, ETH, and Solana. They're pretty safe. So everyone should knock their socks off. 80% of their portfolio, do that and you'll make money. 90% of portfolio. Don't use leverage. Then we're all humans. Give yourself 10% and do the fuck what you want. Most of the time you'll find out that 10% goes to zero, which is fine. It's a good lesson. You don't care because you've made plenty of money on the rest. But if you are that genius who can find the 1000x meme coin, knock your socks off. The average person watching this has no chance of making the money. They'll make normal returns, not super normal returns. So Microsoft is whatever it is, $2-3 trillion company. What could it be worth? Who knows? 10 trillion, 15 trillion, doesn't really matter, right? That's a 5x. What, for the most revolutionary technology the world has ever seen, you make 5 times your money? That's not, but somebody else in VC or earlier, in some way, shape or form, or the entrepreneur will make all of the money. And this is the thing I don't like about the system as it is. It's kind of rigged against the ordinary person. So we're going to have your jobs replaced, you're going to have this societal change, and yet they don't get a chance. So yes, invest in technology. Don't own any other stocks. Own technology. And you will capture some of this. You're investing in your own demise. At least you'll get some high quality returns. But otherwise, the only way I can come up with, again, and we keep referring to it, is crypto. Remember we talked about, what part of your destiny you're trying to manifest here? Which part of your lifestyle chips are you trying to cash in? So if you're trying to get rich quick, I want to make loads of money by next year, I'd rather you didn't do this. I don't think that is a sensible, intelligent way of living your life. You're going to take too much risk and you're going to be susceptible to lose it all. If you said, hey, Raoul, listen, what I want in 5 years' time to have made a decent return on my money, 3, 4, 5 times my money. I'm like, yeah, that's fine.
Okay, I'm going to ask you for a price prediction.
No.
You don't do price predictions?
Not anymore. And the reason being is because a lot of people listen to what I say, and therefore they then build a mental model around a price.
Mm-hmm.
And what you do is then you create a false comfort in what you're doing. But Raoul says it's going to X. And that stops you doing the work to make yourself test anything. And then you start extrapolating, well, I've put 10 grand in, and if Raoul's right, I'm going to have $1 million. Like the whole thing becomes this emotional journey. Mm. And so I've tried to stop doing it because the best thing I can say to people is, listen, 2032, 2034, that is not long away, 10 years. This asset class is going to go from 2 trillion to 100 trillion, right? That is a huge return. Now, some of the coins in that space will do a multiple of that. That simple thesis is why I built XPAM, the asset management company, Exponential Age, was just to capture this trend, to unfortunately it's only for high net worth investors and institutional investors, but just let them go on that journey, get the hedge funds to take the risk and figure it out and do that. But if people just do that, give me 10 years, just give me 10 years. And if you do it 10 years and you're sensible, you'll be able to take a whole chunk of money out every few years because it's quite cyclical. It moves maybe every 4 years. And so you can take a chunk out, cash it in the lifestyle bank, and keep moving towards that goal.
Raoul stresses the value of comprehending the long-term prospects of cryptocurrency investments, especially those in Solana, Ethereum, and Bitcoin. When managing your cryptocurrency investments, he emphasizes the importance of cautious execution. To reduce dangers, this involves using trustworthy storage techniques and keeping your seed phrases safe. Raoul advises concentrating 80 to 90% of an investment portfolio on these leading cryptocurrencies without the use of leverage, since this can increase losses. For the remaining 10%, Raoul recommends allowing yourself the freedom to experiment with higher risk investments, like speculative altcoins. He acknowledges that most of these riskier bets will likely fail, but the bulk of the portfolio's conservative investments should make up for any losses. He contrasts this crypto potential with tech stocks like Microsoft, pointing out that while tech investments may be somewhat rewarding, they can't compete with the transformational returns of crypto. Raoul's primary point is that cryptocurrency gives regular people the opportunity to take advantage of technology developments that were previously only available to venture capitalists and wealthy people. He suggests a 10-year time frame to get significant returns and rejects the idea of becoming wealthy quickly in favor of an approachable strategy. He advises investors to consider the cyclical nature of cryptocurrency and to strategically take profits every few years to finance their lifestyle objectives. Make sure to subscribe to our channel. Hit the like button if you found this video valuable. Thanks for watching.